So good afternoon, and welcome to Innovative Business Advisors Thursday afternoon webinar. Just to give you a sense of what we're doing today, and you may be able to see on the screen now, maybe you only see me, but there are three panelists on the screen with you today, myself and Steve Denny. Steve will give a very brief update. I don't believe there is very much to report today relative to the CARES Act and any legislation coming out of the federal government. On the other hand, we do have another partner with us today, Joe Bankin. And Joe is a senior advisor with Innovative Business Advisors. So you'll have an opportunity to sit in and listen to a bit of a fireside chat. I think Steve and Joe, the only thing we're missing is the fire right now. So we're just going to have a little bit of a chat here. And Joe is going to share a fair amount with us, which I think all of you as business owners will find very, very interesting. Before we jump into that, let's just do a logistical check again. And I'll remind you that we're in the Zoom portal. Within Zoom, there are two dialogues. There is the chat dialogue and the Q&A dialogue. We are asking you to type your questions into the Q&A dialogue. And the reason we ask that is the Q&A dialogue we can actually capture and send back to you a transcript of the questions that are asked in that Q&A dialogue. So please use the Q&A dialogue to pose your questions. And as always, don't worry about taking notes or anything of that nature, because this recording will be available to you on our YouTube channel. Anything that's shared as a presentation will be added to, but I don't think we have a presentation today. I think it's going to be the recording, and that will be it. So with that said, Steve, I'm going to go ahead and turn it over to you, and let's get started with our discussion.
Excellent. Thank you very much, Marquita. So yes, there isn't much of an update from just listening to all the news media and reading the journal every day. What appears to be happening is that everybody's elected that they're going to sit this thing out until after the election next week, and then maybe there will be some type of aid programs back on the front burner in Washington, D.C. So we can only hope. Seems to be certainly a lot of interest in that in the marketplace. The other thing I would say is we have talked to a lot of different bankers, and a lot of the bankers are saying that they are beginning to accept the forgiveness applications. However, just had lunch with a banker today and was telling us that the SBA is being very, very slow in terms of bringing the decisions back to market. So I apologize for that for a second. I was temporarily distracted, but yeah, so there are processing forgiveness applications, but the SBA is just beginning to move pretty slowly, and everybody's still hoping that there's going to be another tranche to this legislation that will provide some additional guidance for forgiveness applications. So we're hoping to see that at some point in the future. So with that, I am delighted to introduce to our audience here, Mr. Joe Bankin. Joe joined our team earlier this year. Joe is a seasoned professional who has owned many different businesses over the course of his professional career. We're very excited to have him with us. In addition to being a business owner, business grower, and business seller, Joe is also a CPA and a really, really strong numbers guy, and has brought a whole fresh perspective into our organization, and his view on the financials and some of the financial work that we do on behalf of our clients and in representing our clients out into the marketplace has made us, I think, second to none in the marketplace. So Joe, we're delighted to have you. You bring an awful lot to the team, and I'm really excited to have this discussion with you today, where we're going to talk about 4 key business principles that you learned as a young man were really important to helping you run successful organizations. So welcome, Joe.
Thank you.
Excellent. Let's dive right in. Joe, I know one of the key things that as you and I were talking in the past, you had really stressed experienced managers in your business. So that is a key principle. And as you know, we often find business owners that have grown their business and will have, lots of family members and lots of friends and early employees that are promoted to, increasing areas of responsibility and may not necessarily be the best, most experienced managers they can get in those slots. You want to talk about your viewpoint and your experience in that regard, and what you recommend for business owners at this point?
Sure. Thanks, Steve. The issue with me was it's difficult. It was difficult for me to work in a situation where you had family members, acquaintances, or whatever working for you or with you. You don't have the perspective you need, because a lot of times emotion gets in the way. And so I found myself in a position where I needed to have strong, disciplined, experienced managers in my organizations. One of the reasons that it was so important for me is that, we're all entrepreneurs at heart, and we kind of seek toward where we feel the most comfortable as a business owner. And my sweet spot has always been financial management. So as I focused on financial management, of course, you're focusing on, the four walls inside your facility. And a lot of times that a lot of consultants will tell you, well, that's kind of a recipe for failure, that you need to be looking out. So it was particularly important for me to find strong, experienced management people. Also, it was in order to attract and keep good management. I was a strong believer in the pyramid style of organization, the pyramid organization chart, as opposed to the spoke hub type of management. The spoke hub type of management, where, as the owner, you're the hub, you're in the middle. So you got 6 or 7 spokes bouncing off of you, bouncing everything off of you. And it's kind of almost like one of the areas where Innovative talks about you put yourself in a position of being the chief everything officer instead of the chief executive officer. So how that affects your middle management is typically, with that style of management, you don't have clear lines of authority. You don't have clear, crisp line management, and people, your good managers aren't going to hang around long with that type of organization. So that was where I've been, is somewhat of a pyramid style Nazi, if you will.
So Joe, you most people won't know if, until they've listened to this podcast and webinar, that you started in the transportation business. You had a trucking company. You built that up to where you ended up having 3 different trucking companies at one point in time, before you ended up eventually selling all of those and then going into the manufacturing business and having a second career in a completely different industry. So I'd like for you to going back to, your whole philosophy and core belief that you should hire only experienced managers in operations and sales. Talk about that as a business owner, and if you can, think back when you had your first company, right? Why was that critical to you? And secondly, how did you go about finding good, solid, experienced managers that would bring additional capabilities into your company?
Many times I would go out in the industry and find good managers that work for my competitors, or sometimes maybe even work for my customers, and recruit and bring them in. And recruiting them into the trucking industry is, if they haven't been in the trucking industry, and many times they had not, they've been good managers, but not necessarily in the trucking industry, it's somewhat of a challenge to bring people outside into that industry, because it's not an easy industry to be in. So typically that's was my method.
Yeah, it's trucking's known as kind of a rough and tumble industry, right? It's always been that way. It's probably more professionalized now than ever, because it's a lot easier to drive those rigs than it used to be back in the day, for one thing, right? And I would say, it used to be, because it was so difficult and required so much physical exertion, it was dominated by men, right? Particularly young men. But I think today, with a lot of the tools and capabilities of these vehicles and loading docks and customer delivery, customer loading processes and unloading processes, there's a much larger diversity in trucking than there's ever been. And I think that's probably changed the game a little bit. But again, your core belief was, you said you really wanted experienced managers to come in instead of kind of growing your own, or bringing in brand new people to the industry and then growing them. Compare and contrast that for us a little bit.
Well, one of the reasons for that was the fact that with my focus and my sweet spot being in the financial management arena, I wasn't a great human resources guy, and I wasn't a great trainer, so I didn't have much of a choice. If I wanted to survive, I had to bring in good managers and pay them well, and price my product accordingly. And sometimes that was difficult to do, but I did, and that was kind of my method.
Joe, I'd like to pose a question to you, because this is something I see with many of my businesses. And one thing, you and I haven't discussed this before, and share what you want or not. But one of the things that I see with my clients, especially when I'm working with clients who are transitioning through the phase of being what we call a lower middle market business, that is, a business whose total revenue is around $1 million, 1.5 million, 2 million, and they're looking to grow forward to a business that's, say, a $10 million business. And I know that I call it a point of inertia that many of these business managers reach is, if the company started de novo, and that is the owner started from scratch, so to speak, and began building up the business, and they get to this point where the business needs and deserves more people, and especially in a scenario where the kinds of positions you're naming are not low wage positions, they are typically salaried high wage positions. Making the decision to make that jump from a business of 1 or 2 to a business of 4, doubling your payroll over again, going from 4 to 8. How have you approached those kinds of challenges? Did you have to approach those kinds of challenges? Because that's where a lot of our lower middle market businesses hit a point of inertia. They just don't. They're not ready to up payroll that substantially at a point in time.
Well, and that's that's especially true in the trucking industry, because when I started in trucking industry, a lot of my peers were first generation truckers. I mean, they came off the farms or whatever and started their businesses with 1 or 2 trucks, and expanded to a larger scale. When you grow, I mean, you can grow internally, or you can grow through acquisition, and I've done a little of both. But my second acquisition was a company that was generating over twice the revenues that my existing company was. So with that came, because it was through an acquisition, quickly I had to realign myself, and I had to look at the management team that I inherited, and then I had to determine the management team that I needed, and take that step. When you double and triple your payroll, or double and triple any liability, and that second company was purchased with a lot of outside leverage, so your break-even points increase, and you have to be very careful on making the correct choices as far as management. And in that particular instance, in that second step process, what I did is I did reach out to the trucking industry, and I managed to attract some pretty decent talent to come in where it was needed.
It's amazing, amazing. A little debt, right? A little debt will put a little fire under you to make sure you get the right people in play. It'll certainly motivate and spur action.
You betcha. You double or triple your break-even point globally. It's going to force you to either be out of business or be a better manager, one or the other.
Well, Joe, I think it's so important. I mean, I also heard you say earlier that frankly, you were smart enough to recognize your own limitations, right? And recognize that in order to grow and get to where you wanted to get to, you were going to have others that had skill sets that you didn't have.
Absolutely. And because I would look across who I was competing with, and where the focus was of a lot of the owners, and most of the focus in trucking and in manufacturing at the top is in where it should be. It's in sales and marketing outside of those four walls. And I knew that I had to find good sales and marketing people, because I wasn't going to be much help there. And it's the same thing with with operations, where you had to find good, solid operations people, because I knew by my very nature of what I was doing, I knew I was not the ideal business owner focusing on the financial aspect of the business. So it forced me to really pay attention to bringing on people where, what we all strive for is combinations where 1 + 1 of course equals more than 2. And that's what I looked for with the people that I brought on. And then you have to have a certain degree of somewhat blind trust that in the people when they initially come on board, and give them enough rope to prove themselves out, and work with them through when they stumble. And but you have to make sure that you're giving them the proper amount of trust and a proper amount of authority to do their job.
So well said. I think that's a nice transition. So just let me see if I can put a bow around this. So, fundamental number one, build your organization with talented, competent people, right? Get the skill sets that are necessary to do each function within your organization. So I hear you loud and clear, Joe. And I also hear you alluding over to number two, this whole thing between, a pyramid style organization or a hub and spoke type of organization. So now you got good talent in place in your organization. Talk a little bit about why you think a structured organization chart is so important, and what that gave to you as you were building various organizations over the course of your ownership career.
Well, I think what a pyramid style structured organization with clear memorialized job descriptions is actually the type of organization that the people I was hiring was coming from. I mean, they were coming from large organizations that had that pyramid style of management. And the problem with the hub spoke is there's no clear, crisp lines of authority. The hub spoke fosters double guessing and redirecting. A lot of times with the hub spoke, the communication lines just aren't there because you've got the owner with 6 different hats on, because he or she has not properly delegated the authority to run the day-to-day operations of the company.
What would you say to an owner that says, look, I just care so deeply about my business, I want to make sure I'm involved in every interaction with clients and make sure that everybody's doing everything internally to my standard? How would you coach an owner, Joe, to quit pulling on the reins so tightly and give everybody more authority and more responsibility to get the job done?
Well, I would say as delicately as I could, and sometimes that's not very delicate, that basically, if you really care about and love your company, you're going to destroy it with a hub spoke operation. You are not, show your love for your company by putting together a solid pyramid style operation and organization chart, so that you will have the type of people you need to run the company, and not only have them, but you'll keep them. I mean, with the hub spoke, you're gonna have a revolving door.
Speak more to that, a revolving door, in terms of I'm hearing you say people leaving that you've currently got to go hire for again and refill that. Is that what you're referring to?
Absolutely, because the good people that are good at their job, especially in today's and excuse me.
See, you're in such demand, Joe. And Joe, I think you must have hit the mute button, so we've lost you there for a minute on the broadcast.
I'm so sorry, I panicked.
No problem at all. No problem at all.
Phone was ringing, and then of course I wear hearing aids, but I'm a little hard of hearing, so all the volumes are at their peak. So it not only rings, but it rings very loud. So now, what were we in the middle of?
We were talking about the revolving door. So talk a little bit about what causes the revolving door and how to stop that thing from turning so rapidly.
Well, what causes the revolving door is unsatisfied and unfulfilled managers. And contrary to popular belief, good money alone is not going to keep them. I mean, because if they're good, they're going to get that market rate anywhere. And if they're not happy with what they do all week, they're not going to hang around very long. They're going to move on. And especially in today's environment, I mean, the days of working for a company for 30, 40 years and getting a big pension and moving on is just gone. I mean, if people don't like what they're doing, they have no problems telling you that, you know, I'm going in a different direction. This thing isn't working for me. So I think the organization that is a pyramid organization is going to keep employees longer.
Yeah, I think you're so right. And I think, you know, that we've seen this over and over and over again, you know, particularly in companies that have got a lot of family in the business, right? They'll bring a family member in to do a particular function, and the family member ends up making the same amount of money as you'd pay somebody that was a professional in that particular function. So, you know, you talked about the sales function for a minute, right? So you bring a family member in to do the sales function, the family member ends up basically being at the job description compensation level, which is competitive in the market that the business is competing in. But you may not have the best salesperson that you could get for your dollar, right? And businesses tend to move along at that lower level and pace then, because that just becomes comfortable. But what I'm hearing you say is that, you know, that revolving door, if you're micromanaging everybody, studies have proven people leave their manager. They don't leave the job. People will stay in a job that has good responsibility defined around it, and good authority defined around that job, right?
Absolutely.
But if they're being micromanaged, they tend to hit the door.
They do, and it's difficult with, you know, if you surround yourself with family and friends, it gets twice as difficult, because, you know, it's hard to, you know, look across the desk at whatever, a brother, a cousin, or whatever, and say, look, Joe, you're not working out, and we're sorry, we're going to go in a different direction. Well, that's difficult to do with somebody you love, and it's also makes for a lousy Thanksgiving Day, because, you know, there you go, and so it's tough. I've seen it work rarely. I mean, I was on the board of directors of a quarter horsepower electric motor manufacturer that had four brothers and one sister that did a phenomenal job. They were, I mean, their father really did it right. He put the kids in different functions. He educated them differently, and we had an engineer, had an accountant, and it really worked well. But that is exceedingly rare, and you're not gonna be able to replicate that.
You're exactly right. So very rare. I mean, we just rarely see that. But and interestingly, the interesting irony of that is, if you bring in, you know, an experience, let's pick on the accounting for a minute. You got a business that's growing rapidly, right? And you got mom doing the books, but you bring in an experienced CPA or somebody with, you know, strong financial skills. Generally, the family member that is working in those functions learns so much more, because they're exposed to a much higher degree of competency in that area, that it takes them to a higher level, right? They're not, well, as I say, water finds its own level. They're not just moving it at their own pace. They're now moving at a higher degree of competency. And I think for the few companies that do bring in experienced outsiders, that's one of the collateral benefits they see for family members that stay in the business.
Well, it is, and of course, financial management's my sweet spot. So I mean, I could go on and on about it, but and Steve, you and I have both seen it in the brokerage division and somewhat in the consulting division, where you look at a financial statement that has 110 accounts on it. It had a 4-page P&L, and the I mean, it's just, and it's housekeeping, but I mean, you can imagine what a professional CPA or whatever, if you bring him into the business, what he's going to think of that chart of accounts. But and it just unravels from there. You know, how do you budget that? How do you come up with activity-based costing? How do you compute your break-even points? How do you even figure out your gross profit margin if you don't have GAAP decent accounting?
Absolutely. Absolutely. Well, we're going to get there, but I think in terms of, let's put a bow around this business fundamental principle number 2 here. You know, defined responsibility and authority, clear level of delegation, right? I'm hearing you clearly say, Joe, that was one of the things you learned early and it served you well. Anything more you'd like to add to that?
No, other than it's, you know, I'm old and it's old school, but it is absolutely the Bible. So.
Well, yeah, and I mean, if you go back to it, right? I mean, you can go all the way back to early in the Bible, and it talks about, you know, you can't serve two masters, and that's all about having clear lines of authority and clear expectations, right? Absolutely.
There's a lot of good management principles you can get from that book.
Yeah, it is absolutely amazing in that regard. I agree with you. So you know, you're an accountant and a numbers guy, a professed numbers guy from the very, very early days of your business career, as you've said to us earlier in this call, right?
Absolutely.
Talk to us a little bit. You did something that I just hear of so rarely that it really perked my ears up, and that's when I said to you, Joe, we got to have you on one of the webinars to talk about this. You used break even as a key, you know, measurement of your business, and you really used profit center accounting, right? So talk a little bit about your whole philosophy and the financial systems and controls that you put in play in all the various enterprises you owned.
Well, the especially in trucking, the profit center accounting and the break even point, and I like to measure the break even point as a percent of your 100% capacity. So if you were looking at, if you're looking at a trucking company that had to, we'll define 100% capacity, you know, 100,000 miles a year. And basically, if those trucks had to run, you know, over about 93,000 miles to break even, you had an exceedingly high risk situation. And so what you need to do is focus on that break even point as a percent of capacity and do whatever you can to drive it down. And, you know, you're going to drive down a break even point by either increasing your variable contribution by increasing prices, or you're going to drive down a break even point by decreasing fixed costs. And in the trucking industry, there's a lot of fixed costs, and that gets pretty difficult to do. With reference to profit center accounting, I mean, the trucking industry is perfect to implement profit center accounting. I mean, you would break down your activity to its smallest feasible increment, and in trucking business, the smallest feasible increment is a load going from point A to point B, and we would break them down that way and look exactly at, you know, what revenue, what by traffic lane, where are we making money and where are we losing money. And invariably, Stephen, the old adage, the 80-20 is really true. I mean, you find yourself making the majority of your money at 20% of your activity, but to find that out and validate it, solid activity-based costing principles need to be in place. And the same thing in manufacturing, exactly. As you break down your you break down your revenue and your activities by product and find out exactly where you're making money and where you're losing money. Another thing that is important is a solid, flexible budget. And what I mean by flexible budget is a budget that you use for any level of revenue. And to do that, you need to break down your costs by fixed, semi-variable, and variable. And obviously, then as your revenue goes up, your variable cost goes up, and so does your budget, and vice versa. And that's the way to run it.
So, Joe, let me pose a question to you, because as I sit here and listen to you, one of the impressions that I have here is that as a business owner, as CEO of a business, the industry is less the issue. The knowledge of managing by the numbers is more important. If you were weighting formula for success, technical knowledge of the industry was less the issue for you, or less the success factor for you, than your knowledge of the accounting, if you will, and numbers management within your firm. Would you agree or say that that's true or not true?
No, that's
because you've done two different industries.
Yeah, it's very true. I mean, I was actually in contract mining as well. I was in mortgage and commercial banking, and those bedrock principles flow from business to business. I can apply, and in consulting, I have done so. I can apply those solid principles to any business, and basically the principles don't change.
Good.
So amazing too, when you think about break even as a percentage of capacity. Now that gives everybody a clear goal as well, right? So if you're running it, if it takes you, in your example, let's say, Joe, let's say it takes you 52 miles to get to break even, right? And if you're running at 50 miles, now everybody's got a clear objective, right? We got to get over this hump. And knowing exactly where the targets lie takes so much uncertainty out of what are the necessary actions. You can very easily then begin to pinpoint actions that are necessary to get you over the hump. So I think that's pretty important. And you're 100% correct. These principles are universal. So if you look at activity-based accounting, you can apply that to any type of business that has activity around it.
That's absolutely correct. And the building blocks behind that is the same. Getting great information from your manufacturing floor or from your drivers, so that you have the appropriate, through trip reports and through input from them, so that you have the appropriate factors to put that together. That goes across industry lines.
Yeah, and every business has the same activities. There's the activity of acquiring the customer. There's the activity of delivering to the customer, right? And then there's the activity of keeping the doors opening and supporting the activity that delivers product or service to the customer. So as you said, direct costs, indirect costs, fixed costs. Every business has those components to it. And when you really understand your costs in each of those areas and where your break-even point is, it can really inform the specific activities that you as an owner or you as a manager need to do on a daily basis to get over those hurdles.
Absolutely. And the formulas for taking a cost and breaking it down between fixed and variable is the same for every industry. I mean, how you do that is the same. So there's a lot of flow through every industry you're working in.
You know, it's amazing. We see so many, particularly smaller businesses, that use basically a checkbook style of accounting. And I heard you also emphasize having a solid, flexible budget. You know, in our coaching class, we call it forecast, right? Beginning to build a forecast of activity. And when you've got a good understanding of what you're actually doing every day, it becomes relatively easy to forecast into the future. Can you expand on that a little bit, Joe? I mean, I would venture to say probably less than 5% of the businesses that come to us actually use solid, flexible budgeting or forecasting every day as a tool. What are they missing? What does it give them, Joe, as an owner, that can really help make their lives so much easier?
Well, you know, in the process of forecasting, it gives them everything. I mean, it gives them direction on pricing. It will help them understand where the soft spots are in their operation. And I don't care what size the company is. If it's grossing, you know, $500,000 or $5 million, it's necessary and to have a solid, flexible budget in line. I put myself in a position where I would put together a weekly profit and loss statement, and every week I would change it going, you know, it'd be 1 week, it'd be this number, and then there's a 2-week number, there's a 3-week number, and invariably at about mid-month, I could forecast my monthly profit with somewhere between 5 and 8%. I was within 5 to 8% of my actual GAAP monthly profit. And I knew that 2 weeks into the month. And the reason why I did is because of a great budgeting system that would go ahead and accurately recognize what cost moves with activity and what cost doesn't. And that's really what it's all about, is this cost is going nowhere, no matter what happens. This
all right,
cost,
wait.
Yeah.
Hang on. I got to hit the pause button here. All right. This is amazing. So what I just heard you say is that when you were running your business, you knew in the second week of the month what your profitability was going to be for that month at the end of the month. So you as the owner, in week 2, you knew where you were going and you knew where it was going to end up within a 5 or 8% margin, right? Instead of waiting until you received the reports from your bookkeeper or your accountant 2 or 3 weeks after the end of the close. So you knew before it happened what was going to happen. Is that what you just said?
That's absolutely correct. And one of the things that helps you do that is solid discipline. That, you know, every day you enter your bills into the system so that you can look at, you know, what your expenses are. You don't wait to the end of the week or the end of 2 weeks or the end of the month. You get things into that accounting system as quickly as you can. I was a GAAP Nazi, you know, generally accepted accounting principles. There's 1,000 of them, but the ones, there's a couple that's really key. And they are, you account for your expenses when they occur, not when you pay them, when they occur. You account for your revenue, not when you collect it, but when you earn it. And that accrued accounting system is key to the type of budgeting that I was doing.
A GAAP Nazi. That's a new
I've never
term we
heard
may
that
have
term,
to bring
yeah.
into it.
I've never heard
I
that
love
term
it.
before.
But Joe, so important. In my 15 years of doing this, I think maybe one other time I've heard somebody tell me that they had the ability to forecast what their profits were. Frankly, I learned that ability when I was in corporate life, and that's what I began teaching when I first went into business for myself 15 years ago. But I have found it to be so rare for small businesses in particular, for Main Street businesses, and for lower middle market businesses, private companies from, virtually 100,000 to 50 million, that literally I can count on one hand the number of people that I've encountered over the last 15 years that do that. Talk about, you just said it's all about the daily discipline, right? Of putting the numbers in. And this really isn't a cost. This is really a benefit, right? I mean, you know where you're going 2 weeks into the period before the period even comes to an end.
That's correct. And you're going to know if you're, let's say you're a seasonal business, or you just have a couple of bad months and you're getting concerned about going broke. So the system is an early warning system that, okay, it's the end of the 2-week period, and it looks like that at the end of the month that I'm going to have a $25,000 operating loss, but I've only got $35,000 in the bank. And if I don't extend my working capital lines or start talking to the bank about working capital, I'm not going to have enough money to make payroll. And those are the critical things, is what the profit tells you. The profit is the beginning of determining a cash position. So you have to have the profit to begin, and then you take a look at the balance sheet changes to determine the cash flow. But you have to start with an accurate projection of the profit, or in many cases, the loss.
Well, it's interesting. Steve and Joe, I'd like to jump in here a minute, because I'm going to play a Terry Lammers role here in terms of the shameless self-promotion for what we do, and talk a minute about CEO to CEO, because this is a perfect sort of a opportunity to talk about that program, the proprietary CEO to CEO program, relative to how, Steve, you put a lot of the core of the model in place that talks to this concept of knowing day in, day out, week in, week out, what you're building toward, and you're able to take a look at your full month well in advance of hitting the end of the month. And I will say, Steve, you said it, and I will say it again. It's amazing the number of business owners we work with that we find the process is they wait until accounting, their accountant brings the books to them, which may be 2 weeks to a full 4 weeks after they've closed the month, before they know what's happened. So one of the things that I think, as before we get off the call, is to talk a little bit about CEO to CEO, and this concept that Joe has presented to us lives within that program, and anyone who's interested in knowing more could really pick up a lot from that program. Shameless self-promotion.
Well, thank you for that, Marquita, and you're a great teacher of that program. So you do an excellent job of communicating all the principles in that. And one of the things, Joe, we require business owners in that program to do is measure what is the cost of every minute in their business. Because if you've got the systems and processes in play, like you mentioned, right? So you've got good information every day, and that's the secret to the whole thing. You got to have information that is timely, meaning that it's current information. It's not old information, it's current information, right? And you got to have good targets of where you're going. And so if you're experiencing a day in sales, for example, we used to teach the value of 5 minutes to our crews, because our time clocks recorded people's time in 5-minute increments. Okay. Now, a lot of times time clocks will record people's time in 15-minute increments. It's important to know how you're paying people if you have a lot of people on an hourly clock, right? Because what we would do then is monitor sales in our operation hour by hour and in 5-minute increments, right? So we knew exactly what the sales were in the operation. And if we got to a point in the day where we had only achieved 60% of the day's sales, and normally at that point we were at 80 or 90% of the day's sales, we'd start sending people home early. And we would pick up that 5 minutes per employee, or 10 minutes, or 15 minutes, or 30 minutes, or an hour per employee costs that we could save in the day that would help lower our break-even point for that particular day. So the day wasn't as much of a bath as possible. And if you wait till the end of the period and wait till your accountant sends you the report, and you're then 2 or 3 weeks after the end of that period, you can't do anything about it. It's already baked. It's done. It's in the bank, right? And Joe, as you well know, what we see the most of is people that are surprised. They get into a cash crunch because they don't have timely, accurate information that allows them to see into the future and predict what's going to happen. And thus, they run out of cash.
It's absolutely key. And another great benefit of spending all that time breaking your costs out, making sure that your accruals are current, is I put out accurate financial statements within 5 days of the close of the month. And basically they were right on because of good accrual methods and good ways of predicting what's out there and what expenses I'd have to account for during the month. So that's another side benefit, is the quick actual accounting records. And Stephen, you're absolutely correct. I could go on the factory floor because I knew what my fixed cost was per day. And if I had a machine broke down, I could tell you how much money I was going to lose that day, because I knew what costs were fixed. I knew what costs were variable. I knew what the machine produced per hour. And I knew what was going into inventory, and that would be considered a build in inventory. And so I could predict pretty closely how much money I would lose that day. So.
Well, excellent, Joe. I mean, I think this has been very important. We talked about, 4 key business principles. So let me see if I summarize them and hold me accountable. Will you please, Joe and Marquita? Number 1, build your organization with talented, competent people, right? Number 2, provide a defined responsibility and authority, and delegate responsibility and authority to your people. Hold them accountable for getting the job done. Number 3, focus on activity-based accounting. Get real, good, solid numbers every single day and understand how the numbers are tied to the activity of the business. And then number 4, better have some budgeting and forecasting and really know where you're going on a daily basis, and use solid, strong financial systems to make sure that you are on the right track.
That's it.
Anything else to add to that? So I'm going to add something, Joe. I know you've built many companies. You started small, you built them up. You use strategic acquisition where appropriate to make a significant impact into your business, right? And you were able to sell those companies and build a small fortune for yourself. I mean, there's a payoff for this hard work. Am I right?
There is. There's a few, and I call them grave dancers. There's a few out there that's looking for bargains that'll, buy a company that's on the verge of bankruptcy, but not many. Most people will pay, are going to be looking for successful companies. And in most instances, and Stephen, you correct me if I'm wrong, in most instances, the larger the successful company is, the higher the multiples of earnings for a price. So it's really a double-edged sword.
Absolutely. And these are principles that have worked for, as long as you and I have been around, which is a long time, and certainly existed before we were even here. So these are rock solid, proven fundamentals that work every time you put them in play. It's the secret guaranteed system of success.
Yeah, the fundamentals don't change. I mean, what helps us is all the technology. I mean, the scanning, the barcoding, all the electronic stuff helps, but those fundamentals don't change. I mean, it's just like digital marketing. It doesn't change the marketing principles. It just changes the method of delivery.
Yeah.
Right. Well, we're sitting at 3:57, so we're getting close to the top of the hour right now. So I thought I might begin to wrap it up. I'm looking down at our Q&A dialogue, and I don't see any questions posed right now. So with that said, I'm going to go ahead and start the wrap-up process. And Joe, just so you know, the way I wrap up is I give both you and Steve an opportunity at the very last words around this topic and any message you want to give to our audience as we begin to close down. So what I'll do, Joe, I'll give you the first shot at the let's call it the penultimate last word. And then after that, I'll give Steve the last word. So Joe, any last comments you want to make to our audience to kind of sum up what we've been talking about for the last 50 minutes?
Yeah, those members of the audience that aren't as driven towards financial management as I might be, and their focus may not be there, just don't be overwhelmed by everything we just talked about, because it's not that hard. It's just a matter of applying good principles and disciplines to your operation, but anybody can get there.
Great. Thank you, Joe. Steve, you get the absolute last word.
Well, thank you first and foremost, Marquita, and Joe, to you as well. I mean, listen, we're here, we exist, Innovative Business Advisors exist to help business owners get to the next level, help them realize their dreams. And we are just so honored to have incredible folks. Marquita is an absolute rock star. She's an incredible teacher. In our coaching programs, we have these fundamentals baked in. And as I think our audience can see today, we're so pleased to have experts, gap Nazis such as Joe as a member of our team that are so well versed and can go into any business and help any business create the systems and processes that will allow them to get to the next level. And, our fundamental belief is we're here to help you grow the pie. And at the end of the day, when you're ready to convey it, to make sure that you convey it without leaving money on the table, and that you are able to get the maximum benefit for you as a business owner and for your family. So our whole purpose is to be here to serve you as the audience. And we hope that you'll reach out to us when you need us. We're happy to engage with you, and we will definitely help you, show you the way to incorporating some of these fundamental business principles into your business and achieving the outstanding success that your business is capable of. So with that, I'll say thank you very much for your attention again this week. And Marquita, again, thank you so much for stewardship of this webinar, and we'll look forward to next week.
Bye-bye, everyone.
Take care.
Take care.